Hi everyone, it's been a long time since the last midweek market focus. Right, so what I'm going to cover today is I'm gonna show you a few of the trades that I've taken myself, and I'm also gonna show you some potential trades that are setting up, and then some other uh, bits and bobs that we're gonna come across. So we've got Cat Swiss here, right? Daily chart. I'm gonna open it up. There we go. Right. First of all, you have to put all the key levels on. So there's a key level there, and this is the main level that jumps out at me as soon as I see the chart. This is acting as a level of support there and there with a bit of noise there, no problem. There as well with a bit of noise there, but it comes back and closes on the line or above the line. So it's still valid, although it's a bit weak, this area here. That's much better because the whole cycle stops on the level itself. And again, and here it kind of rejects the level there, this zone here. And it's a bit weak, as I said. And now that's the floor, right? That was being the floor, the level of support, which becomes resistance. See here and also there. So now support becomes resistance, not once but twice. And then if you go back in time to this highest bar here, there it is. You can also see the cycles: phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. And it gives a massive highest bar, okay? And it's making lower highs and lower lows, so it's going down. The whole picture is down. Control the train line, ignore that noise, otherwise it won't match up, and it's gonna go here. So we have one touch, this whole thing is one touch, and another touch here. Here it's not touching, so it's not qualified. So I have 1, 2, and 3 there. So this highest bar breakthrough, but then it pulls back down and closes on the line or below. Therefore, it's qualified. So we get the 3 touches there. Excuse me. And so yeah, you get lower highs, lower lows, nice trend line, and it's bouncing off a nice key level here several times. So support, 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 breakthrough, that becomes support again and again, then it breakthrough again, then it becomes resistance and resistance again. So I've taken it there, right? I had an entry just below the low of the bar with a stop loss just above the high of the bar. And it was playing games for a few days, so I just left it running. And here it got triggered in, then it was playing games for a few days, and then eventually ended up kicking off after a week or so. Yeah, so it took a while. Took a while to kick off. It's never gonna be perfect. It's never gonna be like here that it just goes and comes again. So that's why patience is one of the key elements in trading. That's the point. As you get all this mess here, this line becomes invalid. So get rid of that, and then you have to see whether it matches up nicely or not. So from here, you only get the 2 touches, and so it'll go there. Becomes a bit weak because it's only, well, let's put this a bit lower. And 1, 1, 2, and 3, a bit weak. And yeah, so that's the trend line. Once it's been broken here, so it stays like that. And what you can do as well is to copy and paste this line, drag it and you put it somewhere down here. There we go. If it's going down, the line at the top is much more important. Okay, remember that. If it's going down, the line at the top is much more important when you're looking to sell, because the stop loss goes above. That's why. because the money will come later. That's what the target goes. That will come later. Okay, and all you have to do is to trade the stop loss all the way down. So we go forward. There we go. So basically I left it running, left it running, then it kicked off to the downside, then a tiny pullback, and I moved my stop loss from here down to there. Then I left it running, and running, and then here I moved my stop loss from here to there. And we go forward and forward and forward, and that's where we are now. Okay, so I moved it twice. First time here, and the second time I left it there. That's it, and I got no target. And I don't care what happens. If it shoots up to here, I'm gonna get stopped out there. Okay, in the profit. And if it carries on going down, I'm gonna keep on trailing it. The problem is that if you trail it too aggressively, you're gonna get stopped out. Okay, if you trail it too aggressively, like every single day you trail it very tight, it's gonna kick you out. Okay, if you allow a bit of more room for the market to breathe in and out, then it's gonna go a bit further. Okay, so now let's get rid of all this. I'm gonna show you the bigger picture on the on the monthly chart. So have a look at the monthly, comma, and enter. Look at the monthly chart. It hasn't moved yet. Okay, look at the cycles. Pulls back down. Yep, phase 1, phase 2, phase 1, phase 2, phase 1. So it has quite a long way to go. I'm not saying that it's gonna go all the way down to there, but it has quite a long way to go. Okay, so basically, that's why if you trade it very aggressively on the daily chart, you're not gonna be able to hold the pullbacks because it's gonna cut you off. Okay, so that's why I've been a bit kind of more conservative with my stop rather than being aggressive with my stop. Okay, back to the monthly chart again. So if it carries on going down, happy days, I'm gonna be trailing it. If it pulls back, it's gonna stop me out. But either way, I'm happy with it, regardless of what happens. Okay. Right, so this cat Swiss, fine. Okay, let's move on. I'm gonna go on to I think it was Kiwi Japanese yen. There we go. Kiwi Japanese yen. And a nice big range here. Beautiful range. Okay, for those of you who are trading ranges, so these are the turning points. Okay, and it gave a rejection of this level here, and it's also where the 200 moving average is as well. There it is. Okay, for those of you who are trading with divergence and convergences, this going down, this going up on the stochastic, and same thing on the RSI as well. If it's not clear, make it bigger, and then you'll see. There it is. So it's actually giving what's it called? RSI divergence, not convergence, which means that it's going to reverse. And also, it's right at the bottom, and it's bouncing off the 200 moving average, and it's a bullish bar. Okay, so that's a key turning point, potential turning point in the market. So if you go back to that date, there it is. That's how it was. And you also have from the swing low to the swing high, fib extension 1.272. There it is, from the previous swing low to the previous swing high. Ignore the last one. Never pick the last one because it will never match up. If you're trying to fiddle with the price now, trying to put the Fibonacci, it's never gonna match up from the high or the low. Doesn't matter. It's not gonna match up, never. So you have to go to the previous cycles, previous swing lows and swing highs. If you get it wrong, if you go to the high from the high to the low and it's not matching up, then it means it's the other way around. So you do it the other way around, from the low to the high, and there it is, 1.272. So just again, when you use the fib, by the way, those are the settings for both of them, for the retracement and the extension. So you can pause it and get it all done on your charts. Okay, make sure it's a number 2 there. Don't tick the boxes, change the color. These are all the numbers. Make sure you get the on and off right as well. So pause it, and then you can get it all done on your charts. Okay, cool. So now you ignore that one, the fib extension, because on the fib retracement tool you have both of them. You have the retracement and the extension. So from the swing low to the swing high, there it is. So this is 100%. Okay, so it goes down 1.272%, yeah, of this whole move before it potentially reverses back up again. So I had an entry here and a stop loss there. Stop loss was beneath the 200 moving average, below the low of the bar, nice and safe. We got forward, and it got triggered in, but you have to do nothing on this day, which is day 2, and then on the day 3, that's when you move the stop loss. Okay, like an incandulator type of thing when you trade the these ranges here, and then you go forward, trail your stop loss, trail it, trail it, trail it, trail it, trail it, trail it, all the way, trail your stop loss, and this is the first bar that takes the previous low out. Sorry, that one. It's the first bar that takes the previous low out nicely, and then it cuts you off. So we make from here all the way up to there. Okay, so this move here, that was a good trade. Right, okay, that was a big range, and that's where we are now. It came back down, and that's where we are now. It's sitting on the 50 moving average. Now, Swiss yen daily chart. Let's see what's happening here. Right, okay. Now, what I want you to do, we're going to do an exercise. So go to Swiss Japanese yen daily chart, and what I want you to do is to do as much as you can. So what you have to do now is to pause it, and then put all the levels on it: support, resistance, trend lines. Try to play with the RSI, stochastics, if it's giving divergence, convergence. Use the fibs if you're familiar with it. If not, just put the levels and the trend line. Okay, and then see whether it's bouncing or not, or the moving averages. So as I said before, now pause it and then do the exercise, and then carry on within 5-10 minutes or whatever it is. Okay, I'm going to carry on myself. Right, so the trend line goes here. This is the line that jumps out at me straight away. A nice, very nice, solid trend line support, to be more precise, and is also bouncing off the 50 moving average. So whoever got this right, well done. Nice trend line there, and whoever figured out that it was bouncing off the moving average, well done for that as well. Now, what else? Let's see if it's giving divergence or convergence. First of all, we have to identify the cycles. Phase 1, phase 2, phase 1, phase 2, and so on. Phase 1, phase 2, and so on. Fine. Now, the last two swing highs, what are they? Well, there's one here and one there, because it's going up. Okay, so you have to identify the last two swing highs, and all you have to do now is to connect them. There we go. Higher highs, and here as well, higher highs. Okay, so it's giving higher highs, and it's also giving higher highs on the RSI indicator, which means that it's giving convergence, so it's in agreement. Therefore, is likely to carry on going up. Whether it goes up or not, we don't know, but we're playing with the odds. You want to have all the odds in your favor. Okay, this is all about probabilities. So whether it goes up or not, we don't know, but the likelihood of going up is greater than not, right? Okay, what else? Now, we need the support and resistance, right? Support, resistance, they're all horizontal levels at the end of it. And where are they? Here, what it says horizontal line. Do left click on it, bring it down slowly, and this is the key level. There it is. I'm gonna plot the level there. Left click twice, and then right click once, and you go back to the cursor. That's it, done. Okay, so we have this touching there, level of resistance, resistance, that breakthrough, and it becomes support. Exactly, it becomes support. So resistance becomes support. So we have the horizontal level there, we have the trend line, we have the 50 moving average, so this whole is holding it there, okay, and it's giving RSI convergence to the upside. And if you want to make it a bit more complex even, we're going to use the fib as well, from the previous swing low to the previous swing high, fib retracement on the 78.6 there. There it is. Okay, I'm going to leave it at that for a few seconds. You can also pause it and then compare it with your charts and kind of finish off the exercise. Right, I'm gonna get rid of this, remove, there we go. What else? Fine, now the question is, okay, let's get rid of all this mess here. Out, and now these are all the pros. Now we're gonna identify some cons, okay? You have to see, put all the pros and cons, kind of against each other, and see, okay, all good, happy days, great, level here, trend line there, but now, what is he holding it? What's happening there? Okay, first question is, how many times has passed this level? Okay, and how did it pass this level? Well, here it just shot up in one day. So it spiked up. So it wasn't quite trading nicely up here. It wasn't like a kind of like a gradual phase one nicely going up. So they climbed up and then slowly came back down again. Okay, so that's not ideal. It's better if it kind of goes up nicely. Takes a few days for it to develop, and then the pullback is fine. Pullback is fine. The only thing is the way it jumped up, pretty fast. And obviously came back down again on a retest. Fine, cool. And also how many times been trading up there? So we're gonna go back in time. I'm gonna go back and see how many times he's been up there. Well, a quick spike, that's nothing, irrelevant. Go back a bit further, nothing there, nothing there, nothing there, nothing there, nothing there, nothing there at all. Nothing there. What year is that? 2005. Nothing there. Go back and back and back and back. 2002. Nothing still. So it hasn't gone past that level for years and years and years. And more. That's 1997. And it hasn't reached that level at all. Right, so there we go. Oh, look at that. Wow. That was in the 90s. Okay. So that was quite a long time ago. Okay. That was quite a long time ago. Imagine 2013 from the 90s. Yep. Like 23 years ago. Yeah, so quite a while ago. Yep. And from here it was trading quite funny. It was before the 90s. Okay, so quite a while ago. Now let's go to the monthly chart. That's the monthly chart. And so it was like from the 80s, 90s, and 80s. It was quite a long time ago. It was like kind of 30 years ago. So it was it went, well, 30 years ago was trading up there, okay? But since then, it hasn't reached that level. Okay, so now that's the $1,000,000 question. Go back to the daily chart. So they did break through, came back down, and he hasn't gone past this level for 20 or 30 years or something. So it is a trade. The trade is just entry above the high of the bar, stop loss below the low of the bar. Okay, so the entry goes just above the high of the bar and the stop loss just below the low of the bar. And you can have no target. Okay, this is all live data, by the way. So you can have no target and you can bring it back up to the top of the range. And also, yeah, so that's quite a nice level. And let's see what happens with that. Okay, right now, let's move on. Right, so let's have a look. Okay, cable is looking bullish still, looking quite bullish. Still within that trend line there. Still there within this trend line. It's a nice trade there. Shot up to here. And then kind of came back down, and that's what it is now, bouncing off the 20 moving average. And the cycles are not as clear in this area. And also it's giving RSI divergence. That's why it came back down. Okay. Alright, so then come at the there is a daily chart. Let's go to the monthly chart. Monthly chart. It's kind of messy, not clear. Just get rid of this. And at the end of it is a big range. It's kind of locked in. See that? And it's kind of putting pressure to the downside slightly. The EMA is going down on the monthly chart. That was on the recession. And then since then it's been locked in within these two levels. Right, back to the daily. And now it's looking quite bullish. So now the key level is, get rid of that. I'm gonna put a level up here at the top. I'm gonna go back in time. There it is, matching up nicely. So we're up here again. Now the question is, how far can it go before it turns? Well, look at this high test bar up here. You get again another high test bar. Look at that. High test bar, down. High test bar, down. High test bar, down. High test bar, down. See the importance of the high test bars and low test bars? And this, is this a high test bar? Well, it has to be minimum half of it. Let's have a look. That's 40 and 40. Yeah, that's a high test bar. Okay, the tail has to be minimum half, so it's still a high test bar. So it's a price rejection of that level, top of the range. Okay, that's the ceiling. That's the ceiling of the house. And that's the floor. And it's locked in. So from there, it can go down all the way down to here. See the range there? It can break through as well. In that case, it'll carry on going up. Fine. If it does break through, look for long opportunities. Okay. It can also stay within the levels here, locked in. Right. What else we've got? Now, in terms of indices, we have all the indices here. Today was a negative day for stocks. The FTSE came down quite aggressively. Dow Jones is pushing down. The S&P is pushing down as well. Russell is pushing down as well, although it's looking much more bullish than all the other ones. The Nasdaq came down today quite a bit, as a big move. It's still bullish. It's still making high highs and high lows. Whereas the S&P, it is bullish still, yeah, but it's broken through the 50 moving average. And the Dow Jones it made a new high, and here still above the previous swing low. So it's kind of, it looks kind of flat somehow. So there's a big level up here, and there's another level down there. So it's kind of flat. EMAs are going flat as well, so it's kind of locked in. He's right at the top. He's at 15,000 mark, so it's gone up quite a bit. We go to the monthly chart, and he's making historical highs. Okay, that's a monthly chart for the past 20, 30, 40 years, and he's making historical highs. Okay, so this has been the highest ever in history. Back to the daily. There it is. So on this day, that was the highest ever in history. That was on the 18th of September. Okay, not too long ago. And so that was a couple of weeks ago. That was the highest ever recorded. And the S&P as well. S&P made a historical high as well. But not the Nasdaq. Because the Nasdaq, quite a while ago, on the tech boom, and it shot up to 5,000 pretty much, and now it's at 3,000. Okay, so that was a big move, and it came back down all the way, and that was the recession here, and since then it's been going up fine. So those are all the American indices, UK indices, yep, all the indices here, fine. Now we get the gold. Gold is still not clear. I just wanted to go down, so then it's gonna be cheaper to buy later. Although it's gonna, it looks very messy and choppy, not clear until it comes up from this mess here. Okay, and now, so all the stocks has gone down today, or at least most of them. Apple, here we go. I'm still holding it. Been holding this for months and months and months, and yeah, I'm still gonna hold it. Still sitting on it. And this is the daily chart. And it's gone up to the 500 area a few times, came back down, and now it's at 480. Okay, 481 or so. So that's fine. That stays there. Cool. Right, now let's move on to stocks and let's see what's happening here. I'm gonna go into stocks. FTSE Power Play. There we go. Right, so right, here's chambering group. I was expecting this stock to potentially break through, which never happened. So that's why I didn't take it. And it was giving a beautiful ascending triangle. So actually, triangle goes. Hang on a second. Triangle goes. Oh, sorry, I'm just gonna pick that one. From here to there, like that. There we go. That's a triangle. So on an ascending triangle, this is what should happen. Now that the longer it stays within the triangle, the better it is. It's gonna build up the momentum, and then eventually it's gonna break through, pull back, and then go. Okay, that's option A. Option B, it just stays there, doing nothing, and option C, it goes the other way. So those are all the scenarios. So it decided to crash down, and it's going down to those lows down there. And it's kind of messy and choppy, so I actually just leave it alone for a while. Okay, that was the trade there, didn't happen, so ignore it now. Right, let's go to the long possibilities. BT, there we go. BT, let's see what BT has to offer. got phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. It's actually giving a double top formation there. Excuse me, there we go. That's a double top, although not quite, because this low can never, sorry, this high can never take this high out. It has to be slightly lower or equal. So it's not a double top. What was that again? That was on the 3rd, 4th. Okay, so it was on the weekend. The weekend was from here to there. So that's from Thursday to Friday and then Monday. And today it went down like everything else did. And it's starting to buy. This bar is a bit too big, so ignore it. And we probably have quite a few. Well, we get 2 there. And these are mining companies. There we go. I wouldn't sell against this level. I wouldn't sell against this level of support. Here it's going down. In it's actually giving a consolidation. If a consolidation, that can be an entry or stop loss there, but it already broke through, so it becomes invalid. So yeah, nothing there. Let's move on. Right, so I'm gonna go on to the long list. And we're gonna see what's happening here. AMEC, nothing there. Anglo-American. Let's see what's happening here. So we have the phase 1 and phase 2, phase 1, phase 2, phase 1, phase 2. So if this pulls back to the EMAs, it's gonna give a nice entry to sell. Okay, so phase 1, phase 2, phase 1, kind of flat and choppy. Well, I'll tell you what, there is a nice descending triangle this time. You know what, triangles are very powerful on stocks. Okay, ascending triangles, descending triangles, and symmetrical triangles as well. They're very powerful. So you put an entry here, stop loss there, and then off it goes. And you normally go for a 3-to-1 reward to risk ratio. So if that's a 1% risk, use this tool here, by the way. If you don't have the price ruler, you do right click, tick the box, price ruler, number 2 there, change the color, click on default, save current setting as default, and then you have to click on OK. Okay, you can pause it if you want to get all the details in case you missed it. Alright, and then once you click on default, save current setting as default, and then click OK, it's going to be always saved there regardless of the page you are on. So you use that tool, yeah, back to the point, use that tool to measure anything you want. Okay, from there to there, 300 pips, whatever, yeah, from here to there, anything you want. Okay, you can also measure the size of the bar or the risk or the potential reward, anything. So the risk was from this line to this line, a bit more because the stop loss goes outside the move and the entry goes also outside, so it is slightly more than that. Okay, so from there to there, which is 56 pips at risk. And you should go for a 3-to-1 reward to risk ratio when you trade in triangles. So that'd be a 1-to-1 reward to risk, 2-to-1, and the 3-to-1 is somewhere down there. There it is. Okay, so that is a 3-to-1 reward to risk. Put a line here. If you're not too sure that it's gonna get down there, you can trade your stop loss. Make sure you don't give it back. Oh look, there is another line here as well. So that was another level of support. And again and again and again, and then eventually break through, and you have to go for a 3-to-1 reward to risk. So quite a nice one, quite a nice trade there. And now it's telling you to sell. It's not good to sell now because it's too expensive to sell that. Okay, you have to, if you're gonna sell that, you have to wait for a pullback, as we said before, then we can sell it. Okay, when it's bouncing off the 20 moving average or the 50 moving average, and on the phase one, okay, not on the phase two, on the phase one. Done. Now you might be asking yourself, right? What about if it goes down now? Well, it can go down now, but it's gonna pull back up at some point, okay? So that's going down, but the sooner or the later it's gonna pull back up because of the phase two, and that's why you have to be cautious. So it's better if you wait for the phase two to finish, and then take it from there. And when it's bouncing off a nice moving average, and you can also use the fibs as well. So from this high to that low on the 618, they are spot on. From the previous swing high to the previous swing low, we're measuring daily retracement, and that's a 618, which matches up perfectly with the level of support. So that'd be a key potential level to sell this currency pair, this particular stock. Right, what else we've got here? I'm holdings, nothing there. EasyJet, let's see, EasyJet has probably gone down even lower. There we go. It's gone down. It's a nice, beautiful trend going up for months and years even. And now it's going down, so we're gonna leave it alone until it starts making lower highs and lower lows. Once it starts making lower highs and lower lows, then we can look to sell it nicely. Okay, with a confirmation like that. Alright. Until then, leave it alone. So first of all, you will have to break through these lows, then pull back. After the pullback, look to sell it. Okay. Okay, let's have a look at Glaxo. Oh, it's been going down quite aggressively. What else we've got? Okay, let's have a look at the banking sector. We get Barclays doing nothing. Lloyd's it's messing about. Yeah, that's doing nothing as well. That's gone down today quite a bit. RBS. These RBS here. So this trending's well too aggressive. Too aggressive to put this trend line here, to be honest. A bit, yeah, a bit too aggressive. I don't like it. I don't like the cycles. Right, so there's nothing there. Now, what else? Go to mining companies. It was shooting up. Let's see what's happening. It's still there. It's catching up slowly. And this could potentially start making high highs and high lows slowly. Phase one and phase two. Phase one, yeah. So if it carries on making these cycles, that'd be your potential trades there, like that. And it's quite a tight consolidation here. And can also go for a breakout from consolidation, which is not that clear yet, because the line at the top is not that clear. The line at the bottom is beautiful, but not the line at the top for a breakout from consolidation. So it can be entry, stop, and at a potential target up to there. You just need to trade your stop loss. So yeah, keep an eye on this one. What else we've got? Oh, custom mines. It's gone down. It's gone down to the bottom of the range. Right down to the bottom. Yeah, they're still struggling with mining companies. Some of them has turned, and some of them has gone down to the bottom, but at least it's made a higher highs. That's a start. Get BP, Messi, there's that energy. Not much happening here. Again, energy. Not much happening here neither. Right, let's see what we have on general retailers. Safranek, Mark Spencer's had a big sell-off the past few days, and he's broken through this pattern here as well today, and he capped as well. That's news driven. Right? This move here is news driven, and that was his cycles, and again another cycle, and that's broken through now, and there's a nice level here, which he did bounce of it. He bounced of it, and then he came back down. That was news driven, this move here. And next, down, nothing there. And ignore the gaps. Next one, Debenhams. Dixons. Right, let's see what's happening here. This could have been a nice breakout from consolidation, which never happened. It broke through the other from the other side, so we cancel it. There's nothing there now. Okay, and though still bullish. This stock's still bullish, still pushing up, making the high highs and the higher lows. Although this is very messy here. So there are more opportunities for Forex than for stocks. There we go. This can be a good one. There we go. That's a channel. Copy and paste. Put it up here. These are the cycles. Phase 1 and phase 2. Phase 1 and phase 2. That's a potential move to the upside. And what else we've got? He gave a lotus bar yesterday. Didn't trigger it. Well, this one didn't trigger it, so you can amend it and place it based on the lotus bar, entry and stop. And today didn't trigger it, and it's now giving an inside bar. So you can even place it tonight based on the inside bar, entry above the high, and the stop loss below the low. So it'll be like that. Entry and stop, and then go for like a 3-to-1 to the top of the range, which is up here. So you have to watch out, be careful, because you have to watch out with this level. As it goes up, be careful with this level, because that's a key turning point, okay? So be careful with that. Let's go back a bit further. Yeah, quite a lot of interaction there. So yeah, it's a nice level there. Brilliant. So yeah, something there. Entry and stop, 3-to-1 type of thing. So that'd be the risk on the trade. So it's 7 pips. Just that's a 1-to-1 reward to risk, 2-to-1 reward to risk, 3-to-1. Yeah, a 3-to-1 to the top of the range, and it's bouncing off the 50 moving average trend line. Now from the previous swing low to the previous swing high, he's giving the 618 there, which is the magic number. Quite a nice level. I'm gonna leave the chart like that for a few seconds. You can pause it and do the exercise, so you can practice. Right, and it's also bouncing off the 50 moving average. Okay, brilliant. I'm gonna leave it here, and make sure you put all the levels, lines, trying to understand the market, the behavior of it, see how it moves, and there are a few trades out there, a few for Forex and a few for stocks. manage your stop loss accordingly, and I catch you all in a few weeks. All the best. Speak soon. Take care.